But this is very inspiring because people, when they perceive a leader or a manager, they assume that he needs to know everything.
I spent almost 10 years at PwC in the UK and then in Singapore and then in the UK again.
That's why I think your journey is very interesting, because you're not the typical treasurer that we would meet every day.
China is a place that's sometimes quite difficult for us as treasurers to get money out of. But if you have a legitimate invoice for services, your kind of like headquarters company could invoice your Chinese company and say, you owe me X amount for these services. We pool our cash centrally in the UAE. The UAE is our global headquarters. We use it as a treasury center. But if you have your transfer pricing right, then you can constantly be repatriating cash from your operating companies all over the world to your head office.
And do you think AI would help on this part, giving or empowering treasurers to have some sort of tools that would help them on the tax side? Thank you, Mark, for joining me today. I really appreciate it. Walk us through your journey, because it's a very, very interesting journey. It's not the typical journey that you see for treasurers, starting with tax and then jumping on board the ship of treasurers. So walk us through the journey that you went through for 20 years, I believe.
Yeah, so, sure. And thank you very much for having me here today. It's a pleasure to be joining you here and to be doing this podcast. My career didn't start in Treasury. So, I graduated almost 20 years ago, 19 years ago, with a degree in economics, and I joined PwC, so one of the big four accounting firms, and I joined them in their international tax team. So, I spent almost 10 years at PwC in the UK, and then in Singapore, and then in the UK again, and I was always working in international tax. So that was great, but the limited treasury opportunities, and maybe come on to talk a little bit more about my early treasury experience in due course. But then I left PwC and I moved to Dubai 8.5 years ago, and I took a tax role, working for a large working for Reckitt Benckiser for a large FMCG firm, and I was looking after their tax in Africa and Asia primarily. And then I briefly joined EY working in tax, and joined my current company, Kent, which was known as Kentech at the time, about 7 years ago. And that was a role to be responsible for tax and treasury. So that was kind of my first inroad into treasury, or certainly more formally at
So we can say that out of the 20 years experience, 13 years of them was purely tax. And then only for the past 7 years where you got exposed to treasury.
Yeah, I mean, I think that's technically right in terms of job titles, but it's interesting how it works, because there are overlaps. So when I was at PwC, the team that I worked in was actually called the ITT team, which was the International Tax and Treasury team. So but that's not treasury like treasury.
Treasury.
It's not. The people who are working in that team aren't interacting with banks. They're not doing cash flow forecasts or FX. They are specifically looking at the tax implications of treasury matters. So, a lot of that might be kind of, if a loan's being made cross-border around the group, what are the tax implications of that? Looking at kind of like withholding tax on cash repatriation. So there was always a bit of a treasury link in there, but it's very different to doing kind of like operational treasury, which I think most people who would say they were in the treasury profession would do. It was still very much a tax role.
That's why I think your journey is very interesting, because you're not the typical treasurer that we would meet every day. You started with tax, and this is something we're going to discuss later, how important tax knowledge for treasurers. But you started as a tax person, and then you shifted, or you started acquiring treasury on the job. And this for me is very, very interesting. How was that like, being exposed to the treasury, the real core treasury, having worked 13 years purely tax with some flavor of treasury? How was that transition, and how were you able to learn on the job the treasury when you joined Kent as tax and treasury director?
Yeah, well, I think you kind of just had to take it step by step. And I've been very lucky with Kent that kind of my journey has aligned with Kent's journey. So Kent, in the 7 years I've been there, the business is now nearly 10 times larger than it was when I joined. So I've had the opportunity to kind of like grow my skills with the business. But the first things that I did was really as a big part of my job at PwC was international tax structuring. And I think kind of like a core part of getting your treasury function to work is making sure the kind of like the business is properly structured. And I think a lot of people a lot of treasurers might kind of like jump in and do kind of like the more kind of like core treasury things first, the kind of the operational cash flow or the foreign exchange management or something like that. But what I realized from my structuring background was that we were really struggling to get bank facilities, and it wasn't because of kind of the the forecasts of the business or the profitability of the business. It was because the operational structure and the legal structure didn't align. The business was Kent is it was an Irish family, and that's where the business started, but it moved their operational headquarters to the Middle East quite a long time ago, but they never kind of updated the legal structure to reflect the operational structure. So when you went to a bank and tried to kind of like show them your kind of consolidated financial statements, they were consolidated in Ireland, but the business didn't have any kind of activity in Ireland, so Irish banks weren't interested. So what we did was we really kind of we reorganized the legal structure. So we put in a UAE top company to reflect where the senior management of the business was in. So we could kind of consolidate our financial statements into that company. And then all of a sudden, the banks here in Dubai, one of the world's leading financial centers, could understand our business. They were like, yes, the CEO, the COO, the CFO, the head of treasury, they're all here. This is a Dubai-based business. And as a result, we could have much more much better conversations about financing. We fitted much more within the criteria that the banks are willing to lend to. So kind of it all started off with structuring, and at that time, the finance managers at Kent, they were kind of continuing to do the operational cash flow. I kind of came in and I sorted out there was a huge amount of intercompany balances as well all over the group that we were challenging to manage from like a tax perspective. There was tax leakages here, there. And I came in and I sorted the house from a structural perspective. And then it was maybe only a year into my journey with Kent that I employed a treasury operations manager. He still works in my team today, my direct report, senior treasury operations manager now. And I think like with any kind of leadership role, you've got to kind of identify what you don't know. And I didn't have didn't really have any experience of kind of cash management at that point. I employed somebody who did, and I've been able to learn upwards from that. So we've now worked together for 6 years, and I've learned a lot from him about how you manage cash around a worldwide group. We're in over 40 jurisdictions now. We have lots of different currencies to manage. We have to get cash in different parts of the world at like a moment's notice, and he helped me kind of like upskill. So there's a bunch of different ways of doing it. But the first thing that I did was kind of try to get the house in order, because I think that's a really important kind of like core base on which to base everything else off.
But this is very inspiring, because when you say as a leader, or people when they perceive a leader or a manager, they assume that he needs to know everything. But this is not the true story. You need to have, or you need to be actually coachable even from your subordinates. You need to be willing to learn from people that you don't need to know everything, right?
Yeah.
And you need to be willing even from the people who are working with you on the team. So I think what you are sharing with your cash operations manager, this is very inspiring. I think it's something that's very, very important. And I believe that maybe if you can maybe capitalize on that more, this is maybe one of the skills that you might need it to be able to take on the bigger role of tax and treasury and help you to develop there, to have the treasury core competencies along the tax.
Absolutely, yeah. I think that's key to any role, isn't it? I think as you kind of get experience, throughout your career working with businesses, you realize that it's impossible for the most senior people in the business to know everything. It's just they can't. But it's important to know what you know and know what you don't know, and to if there's gaps, to kind of identify that and to employ somebody who does know that. So I think my boss, he might listen to this, but I'm sure he won't mind me saying, when he recruited me, he didn't have a wealth of experience in tax, and he knew that I did, so he thought that I'd be somebody that was good for the role. So and then similar with me, I didn't have a wealth of experience in cash management, so I went out and found somebody at the time who did, and I've learned a lot about it as a result of that. I agree. I think just having that kind of like openness and candidness is important to successfully managing a team.
If you don't mind me asking this question, what was going through your mind when you were first approached by Kent for a treasury role? And maybe in your mind, you thought, I'm a tax person, have been in tax most of my life. What was going through your mind? Did you think this is challenging? Did you think this is fun? This is exciting? This is an opportunity to learn something new? So walk me through what was you going there.
Yeah. Well, I think I've always liked to to do something. I've always liked to learn new things. You could see, even though I spent 10 years at PwC, that wasn't just 10 years of doing the same thing. Yeah, I started off on the graduate scheme in Manchester. I went then to Singapore for 2 years. Then I went down to London and worked on like a different type of clients down there. I think it's important to constantly look for new things. And when I saw there was the opportunity to kind of like broaden my skill set, and I went and I met with the team at Kent, and seemed like a bunch of fantastic people who really kind of invested in their people, and gave them the opportunity to progress and to learn things. I thought it seemed like a fantastic opportunity for me to develop and grow, and it's turned out way better than I could ever have expected. I think one thing that was helpful is when I started at PwC, I did my chartered accountancy exams. So some people in tax do kind of like a chartered taxation exam, but at PwC on my intake they were doing chartered accountancy exams. So I had quite a well-rounded background in accountancy. So I think that it's not essential, but I think that they kind of like help. I had a bit of a broader understanding of the world outside of tax.
Um, Before we move into the technical questions, just to close on the shift between only tax to treasury and tax, what would be one advice you give to someone who's looking to shift to treasury, and maybe he or she is working in accounting or tax or another finance profession? What would be one advice you would give them?
I mean, I think anybody with the right attitude, anybody with kind of the right level of energy can apply themselves to anything, right? So, if you have an appetite to learn and to develop, then you've really just got to get stuck in. I when I came into the role, there was loads I didn't understand. There still is, I'm sure, plenty that I don't understand. But every day, if you kind of like get stuck in and you try and make good decisions and you do things kind of like honestly and decently and come in and work hard, then I think that you can learn new skills. It's not just because you've been pigeonholed into tax early in your career. Tax was never kind of a conscious decision for me. The broader kind of like finance world was, but then once you kind of like go into Big Four, you kind of just get allocated in different teams and you take what's available to you. So as it happens, it's worked out wonderfully for me. I really enjoy it. But I think if you've got that underlying kind of like passion and energy, then you can that can take you a successful career in anything. So if somebody wanted to transition into treasury or to broaden their remit to include treasury, I think just that kind of inquisitiveness and working hard will suffice. Will really kind of assist you in getting there.
It's the attitude above all other things, I would assume.
I mean, you have to have an underlying kind of like technical skill, right? Technical kind of like financial skill. But I think one of the most important things is understanding how businesses work, and maybe we'll come on to that kind of like in a bit more detail. But if you're interested in kind of what the business is doing, and treasury is so important, treasury operations, where's it getting its money from? What's it spending its money on? You really have to understand what it's doing. And if you're interested in the business, then that goes a huge way, I think, to helping you be successful at your job.
So let's jump into the technical stuff. Maybe I know that you have been through multiple projects, maybe M&A, maybe selling businesses, acquiring businesses, etc. So what I want to go through is one example. We don't need to mention names or specific names of the projects, but the main thing I want to focus on is the journey that you went through as both tax and treasury side. What skills you needed to go through this? What did you needed to learn to be able to deliver this project? And how important was the tax experience for a treasury guy? Now we were speaking as a treasurer.
Yeah.
So how important was a treasury for a treasury guy to have the tax experience going through these types of projects?
I think there's quite a lot of questions there. So
let's start with it. Let's start with a project. So pick a project, anything that you've went through in Kent, and let's break it down step by step. The personal skills, the skills that you needed as a treasurer, and then how important the tax part played there when you were going through the project?
Yeah, well, I think you mentioned M&A there, right? So maybe we could take an example of an M&A project as quite a distinct project, and at Kent we did quite a large one back in 2021. You there's a huge amount in that transaction. We ended up buying about 40 different companies, all from the same company, but in about 20 different jurisdictions. So it was. Our lawyers posted on LinkedIn at the time that it was the most complicated transaction they'd ever worked on, and I can well imagine that it might have been. So for me being involved in that, it was very helpful that I had a background in international tax structuring, and that was the team that I worked in. I had a lot of the projects I was working on at PwC were cross-border projects. Sometimes it was M&A projects as well. So I was very comfortable with kind of like group legal structures and corporate structures, how they kind of like interact with each other. And as it happened, we were buying all of these companies, and we it wasn't just a case of buying kind of like one top company and just kind of the shares in one company being transferred. We were buying all of these companies separately. So we had an opportunity to slot them into our legal structure in kind of like the most optimal way. Now, that was helpful for. It was helpful to be able to do that. It was a lot of work to do that, but it was helpful to be able to do it from like both a tax and treasury perspective, because we could do so in a way that meant kind of we managed our taxes efficiently, but also once we owned the business, our treasury flows would work efficiently. So if we wanted to get financing in a particular jurisdiction, we'd be able to kind of like consolidate our financial statements in that particular place to go to like a bank and get financing. If a particular entity was profitable, we knew that we'd be able to pay a dividend out of it to the parent company and do so in a tax efficient manner. We'd be able to get the right kind of documents. An important part of that we haven't mentioned yet that I think is an important part of the role is also kind of an understanding of corporate law. Things like paying dividends and legal agreements that might support kind of like intercompany loans or intercompany charges. Maybe talk a bit more about transfer pricing in a bit. So kind of having that kind of awareness, and like initially it was kind of like designing how are we going to acquire this, so when we actually own it and when we operate it, we can do things efficiently, and we can raise the capital that we want to raise and that kind of stuff. But there's kind of other parts of M&A transactions as well. So when you kind of get into negotiations with sellers, obviously they want to get as much money as possible for what they're selling, and the buyers would like to buy it on the best terms possible. It's only natural, right? So what holds value now? This isn't a specific example from this project, but it's the type of thing that we always look out for. Say you're buying a company in Mozambique, and the company in Mozambique has got $5 million in its bank account, and it's got that because it used to have a profitable project, but the project's finished now. Is $5 million in a bank account in Mozambique worth $5 million? It's not, because
you're not going to be able to.
How are you going to get it out? Mozambique is an interesting example, I guess, because there's both a treasury and tax angle to that. There's a treasury angle that it's very difficult to get out from like a foreign exchange perspective, but there'd also be a tax angle that even if you could convert the currency from meticals to a harder currency and get it out, you'd lose 20% tax when you paid it out. So
for the dividends, you mean withholding tax?
There'd be a dividend withholding tax, yeah. So even if it was in a jurisdiction where the currency was freely convertible, that $5 million is only really worth $4 million.
Assuming it's convertible.
Assuming it's convertible, yeah. So, but transactions move quite quickly, and it's not always possible to go and engage a Big Four accounting firm to look at every aspect of the transaction and get back to you in the time that you need to answer these questions. So having kind of just an understanding of the types of things to look out for, the types of things that are going to be difficult. So even if you're live in a negotiation, you could say no, there's no value attributable to that, and then the conversation, they might accept that, and the conversation might move on, or you might have a bit more of a debate about it. But that kind of thing often comes up in transactions, and I think having both an awareness of the tax impact and the treasury impact is really helpful.
Treasury is changing fast. New risks, new regulations, and new opportunities. The ACT has been helping treasurers for over 50 years now, providing content, qualifications, and connections that will help you grow your skills, grow your connections, and grow in the profession. Become part of the community that gives you voice and help you shape the future of the profession. For more information, visit treasures.org now. I think that what gave you the edge, right? Because going through these transactions and having the tax background that you had made you able to pick out not only the treasury risk aspects of it, but also the tax risk aspects of it.
Yeah.
Right. And maybe this is where we need to touch upon how important is it? This is my next question. How important is it for a treasurer to have a tax background?
I'd say it's a difficult question to answer, and I think I'm tempted to answer it that it's not essential to have one. I won't go as far as saying like not important. Having a tax background, I say, is not important, because you could do it the other way around. You could have a treasury background and then like learn the tax. Of course, the way that I've done it is not the only way to do it. Everyone has a complete unique way of getting to where they get to, right? But I think there's so many different types of roles, and what a particular company needs is not the same as any other company, right? So there's plenty of treasurers, and I don't want kind of like every treasurer in the world, to listen. Hopefully, every treasurer in the world will listen to this, and I don't want them to listen to it and think, oh no, I've got to go and like learn tax now. That's not the case. There's absolutely loads of roles within treasury that specializing in treasury is entirely appropriate for. But I think there's certain types of kind of companies that having a tax and treasury joint skill is appropriate for, and I think Kent is one of them. Thankfully, Kent is. We operate now in over 40 countries around the world, and we're also a project business. So the countries, new territories pop up all of the time, and projects finish in one place and start in another. So being able to kind of move between like when you're going into a new country, they'll you'd have a meeting and be like, how do we do this? And there's always tax questions, and there's always treasury questions, and there's always accounting questions, and there's always legal questions. So it's very helpful that I kind of have a bit of experience, I think, in all of that, and can kind of like contribute, and we can quite quickly get to the right answer without maybe consulting 4 different advisors. But not everybody needs to do that, So, if your business is like a domestic UAE company, then like a lot of that is maybe not required, and it might make sense to kind of outsource your tax work to like a local boutique tax firm or something. So, I think it depends. Treasurers can obviously just specialize in treasury, but I think if people want to kind of progress with their kind of careers, say there's somebody in treasury who wants to be a CFO. CFO has a very, very broad remit, and if you're adding tax to your bow as a treasurer, then you might be taking a step maybe towards that by kind of like broadening your remit. So if people have ambition to kind of like progress to kind of like a bigger role in finance, then maybe it's something that's sensible, but it's not essential. It could be quite important though for growth, and particularly in certain firms, and it's always going to be helpful, right? I think the thing I'd say is maybe having an awareness of what is tax sensitive and what is not is really important. That's not necessarily the same as knowing the answer, but knowing when to ask the question. Knowing this, if I send this money from here to here, somebody might try and take some tax off it. I better go and either ask my tax team or engage a tax advisor, or and not do it until I know the answer. I think that kind of awareness of tax is I'd say essential for a treasurer.
I mean, one of the main things I think for a treasurer to have an understanding about, at least, is maybe transfer pricing and the impact of tax of transfer pricing.
Yeah.
So maybe we can shed some light on that and how important to have this knowledge on transfer pricing for treasurers.
Absolutely. Yeah. I think, again, maybe one of the things we're going to come on to, but your transfer pricing rules have been introduced in the UAE. As of 2024. 2024 was the first year that corporate tax was introduced here, and maybe I'm best answering your question by kind of like referring to that. So maybe I'll just explain transfer pricing as well, just in case any of your kind of listeners don't know. So it's essentially ensuring that companies in the same group, companies that are related, trade on arm's length terms. So they interact with each other on the same basis that third parties would. So if you have a headquarters company in the UAE that might be providing kind of like management services to your kind of like trading company in China, the trading company in China would pay you for those management services, and the transfer pricing ensures that you're paid a reasonable rate for that, because otherwise you could distort things for tax purposes. You could say, because the tax rate is lower in the UAE than China, if you didn't have transfer pricing rules, you could end up with all of your profit in the UAE and none of your profit in China, and paying a much smaller amount of tax as a result, because you're booking more profit here. So the rules very fairly kind of like address that, and ultimately your intercompany charges have to be at a rate that would be commercially agreed between third parties. Now, so
it's not illegal, is it?
It's a legal requirement.
It's illegal. Yeah. No, I mean, it's not illegal if you try to maximize the profits where the taxes are less. How is it perceived? Is it perceived as it's something frowned upon, or is it perceived?
No, it would be illegal. Yeah, you'd be, if you had absolutely no basis for the position that you'd taken, then you'd be in breach of tax law in any jurisdiction around the world. And the majority of jurisdictions around the world do now have transfer pricing law. Now, there's clearly a big scope for debate about what a service is worth. So that's why you would often go to like a Big Four firm, and they would benchmark the services you're providing against firms, the price that is being paid for services other similar firms are providing, and you'd get like a benchmarking report, and you'd then be able to say to like a tax authority, this is the right price to pay for this. Like I've done my research, but clearly like it's not like it's not absolute. It's quite hard to get it right, and the tax authorities would naturally want to have a view where there's more they'd be booking more profit in their jurisdiction than the other jurisdiction, and there's a whole network of international tax treaties to kind of like opine on who gets what in if there's like disputes and that kind of thing. So it's a big area, but it's very related to Treasury because it's all about flows around the group. If we use that China example for that I just mentioned, China is a place that's sometimes quite difficult for us as treasurers to get money out of. But if you have a legitimate invoice for services, then your kind of like headquarters company could invoice your Chinese company and say, you owe me X amount for these services. If that is acceptable to Chinese authorities and Chinese banks, then you can send that money out. And you can get that money out of China, whereas otherwise it might be trapped until you have distributable reserves available to pay a dividend. And when you pay the dividend, you might lose withholding tax on it. So, so it's as a treasurer, I think this is a really good example of where tax and treasury are linked, because transfer pricing very much falls within tax. I've had a transfer pricing in my team, and it's something that's very much kind of considered a tax service. But if you have your transfer pricing right, then you can constantly be repatriating cash from your operating companies all over the world to your head office. And it depends how you manage your treasury and what your operating model is. But the way that we operate our treasury is we pool our cash centrally in the UAE. The UAE is our global headquarters. We use it as a treasury center. So your transfer pricing is a very very good method to get that cash repatriated, both from like a local regulatory perspective, but also from just kind of like managing our kind of like operating teams around the world. They can almost treat that as a supplier. So, on like a monthly basis or quarterly basis, of course, they've got to pay their employees, they've got to pay their local suppliers, but they've also got to pay head office. So we're pooling our cash back with these like legitimate charges, rather than having to kind of, this is even before we might move on to some kind of automatic pooling, the type of pooling that would be more common, I think, for the treasury team to look at. If you get your tax operating structure right first, there's actually less of a need to do as much of that.
I mean, that's what I was trying to point on with my question, that it is not wrong to try to structure your transfer pricing between the intercompanies to benefit the most. It's not trying to evade from the tax. This is not the purpose of it, but it's trying to, exactly as you mentioned, as a treasurer, to pool things into the headquarters in the most efficient that makes sense from a tax perspective and from also profitability perspective, because you want to make sure that you're maximizing on the flows that is coming in to the headquarters.
Yeah, to me the really kind of important thing is like aligning aligning kind of like the legal way, the legal structure of the group and the operating structure of the group, to come back to kind of what we discussed at the start. And transfer pricing kind of enables that. It's all about where is the value in the group. If the people creating the value, so it might be your business development team who's winning all the work, if they're based in a certain jurisdiction, then you should be booking profit in that jurisdiction to reflect the value that they bring to the business. So yeah, you do have the ability to book profit in different places, but it's always got to be aligned with substance and kind of economic activity. And your businesses could make different decisions if all of a sudden, and you see companies do this, they'll move their operating, they'll move their senior team from, to Switzerland or something like that. I'm sure lots of businesses were doing 10 years ago or something like that. So you have the ability to do that, but it's always got to align with some kind of underlying substance and some kind of underlying value creation.
Needs to be justified from both business perspective and also transfer price rules and legal perspective, that this transfer price makes sense in this jurisdiction, etc.
But if you think about it properly, and if you manage it properly as a business, and I think certainly when businesses grow quickly, it doesn't happen. And I think certainly maybe some businesses in the region, obviously tax has only just come in the UAE. Saudi Arabia manages things differently with its zakat regime. Somewhere even like Bahrain is bringing in tax now, right? So there's businesses are learning how the transfer pricing rules kind of impact them. So I think there's there are, I'm sure, plenty of businesses out there with scope to kind of improve things, and you can improve things by just aligning things so the operating model and the legal model that could reduce your tax, and that is clearly very helpful from a treasury perspective if you're spending less cash on taxes. Nice. And it's very likely to be perfectly legitimate ways to do that within the law. It's not even structuring around the law. It's complying with the law. It's just if you don't put a model in place to reflect accurately what you do, and so someone like Kent is a dynamic business. We're growing and we're changing all the time. You've got to constantly monitor your transfer pricing model, because if you leave it for a year, then it probably won't reflect what the business is doing, because the business constantly evolves.
Exactly, because a lot of people who hasn't been maybe exposed to transfer pricing, so maybe someone, a treasurer or mainly a treasurer, if working in a local business that doesn't have transfer pricing, and he's not exposed to that, and then he moves to a company that has more entities and more transfer pricing, they need to have an understanding that you can manage this in a way that benefits your business, as long as it's within the boundaries of the legal and the transfer pricing rules. So I think that's answered that.
One other thing I think that's key to mention for treasurers is the examples of transfer pricing that we've been talking about so far are kind of like operational transfer pricing. So we were talking about management services. There's also financial transfer pricing, which is making sure that your loans, your intercompany financing within the group, is priced appropriately, so that you charge an appropriate rate of interest on your loans. Now, that is again, what's an appropriate rate of interest? You could look at in a particular jurisdiction that's lending the money. You could look at kind of like the central bank rate. You'd always need to kind of like add a margin on so the company that was lending the money made some profit on top of kind of what they are considered to be able to kind of loan out locally. And these are the laws and jurisdictions that have introduced transfer pricing, that your interest must be charged on loans. It must be on an arm's length basis. So I think a lot of certainly in the Middle East, like a lot of companies are grappling with this right now, because for 2024, for the first time in the UAE, it was like a legal obligation to do so. Now, many companies would have done it anyway, because it's often quite tax efficient to charge interest, because the UAE does have a lower tax rate than say most countries in Europe. So if you're loaning money from the UAE to Europe, you're getting an interest deduction in a play, as long as it's legitimate and for kind of like business purposes. You're very likely to get an interest deduction in a jurisdiction where the tax rate might be like 25%. And the same amount of interest income will be booked in the UAE, where you're paying tax at 9%. So you've got like a 16% arbitrage there from financing that and from charging the interest. Whereas if you didn't charge the interest, you did it on an intercompany loan. Previously, I think a lot of companies weren't doing that because they didn't need to from a UAE law perspective, and the European country didn't really care because that was a taxable deduction. So if you had charged it, you would have been taking tax away from the system. But now I think companies are finding that they can actually be more efficient because of the introduction of tax rules in the UAE. You know, they're just getting a bit more robust. You know, having a bit more kind of like robust processes and procedures in place. And as a result of that, yes, there's a bit of admin or there's a bit of kind of like work to do to the ERP system to calculate it. But you're not only it's making you more tax compliant, but it's also saving tax, which again helps with your treasury. You've got more cash to flow around the group.
Speaking about the new tax laws being implemented in the UAE, we would like to go into what's happening in the UAE and the GCC in the Middle East. But let's start from the global legal or tax view. What's happening globally? Because from my understanding, we're converting to a world where there's a minimum of 15% corporate tax.
Yeah.
So let's take it from top down. What's happening globally? Why we are having this shifting or this methodology in applying the taxes worldwide? And then take it down. What's happening in the UAE and GCC and Middle East accordingly?
Sure. Yeah. So, yeah, absolutely right. There's a push for a global minimum tax of 15%. A lot of people may have heard of the Pillar Two rules, which is essentially that. It's a set of rules led by the OECD, the Organization of Economic Cooperation and Development, and the idea is that the minimum rate of tax in any jurisdiction of the world is 15%. Now, whether or not that's fair is a topic for debate, right? I think
it's a whole other episode.
Yeah, and I think it is a whole other episode. What I would say is that it's very clear to me over the last kind of 20 years working in tax that great developments have been made in ensuring that companies can't evade or even like easily avoid tax. I think the tax rules have improved. International tax rules have improved very, very significantly. So your companies now are just generally paying tax in the places where their value is created, a lot more so than I think was probably the case 20 years ago. So I think the rules that they've introduced so far have been very successful. I think there is a danger with this current rule to go to 15% tax globally, and it's it's the G7. I think Joe Biden was very keen a couple of years ago when he was president, pushing it through. There is a danger that I think they've overstepped their mark. Like with the UAE, should be able to tax whatever it likes, as long as people are here. If they generate their revenue in other ways, through I don't know, DWare or Salic or through the energy industry, then there's certainly an argument who should tell them what to do. But what I think we've seen the UAE kind of introduce tax. We're seeing it now around the region. Kuwait has introduced 15% tax. Bahrain is now introducing tax. Qatar has introduced the 15% domestic minimum top-up tax. We'll see what Saudi Arabia does. There's likely to be a big announcement. I would expect in the next year. There certainly must be considering it. So and I understand why they've brought it in, because it helps. It helps, like, if you look at the UAE was on the grey list for the EU's Financial Action Task Force. Bringing in like a tax regime does help, I think, to really develop the processes and the procedures of the place, and it improves the financial standing of the place. It got removed from the grey list, and my understanding is being part of the introducing corporate tax was part of that, and that helps us treasurers from like a banking perspective. It makes the flows a lot easier. So I personally think that introducing tax in the UAE has been a very good thing for the UAE. I think it kind of it legitimizes the place. It's made our businesses that are based here. They've had to make a step change maybe to kind of like improve their accounting records and to do things a bit more robustly and have better policies and procedures in place. But as a result, I think you're developing stronger businesses, and they've done so in a way that it's not. It's not too high a tax rate. It's not too painful a tax rate for businesses to absorb. So I'm quite supportive of that in general. I think it's been good for the UAE, and as it kind of like spreads out across the region, I think it might be quite good for the region as well.
Speaking about the rates of taxes, how can someone if we can go through this. How can someone, a treasurer or a company, benefit from the different tax rates? Because I might be buying something from a European
Yeah.
country, and paying a specific tax on that that might be higher than 15%, or I have an entity there that's paying
Yeah.
might be higher than 15%, which I'm paying here in UAE. So what sort of agreements, or what sort of things that we can benefit now with the new tax regime?
So I think, I mean, I kind of think we've already discussed it. I think it is mainly the transfer pricing, and
Mm.
it's not necessarily about benefiting. It's just about making sure that
Optimizing, let's say optimizing.
just making sure that you're booking the right amount of profit to relate to the value
Mm,
that's been created in that particular jurisdiction.
mm,
So to me, it's just making sure that these things are considered and documented, and you're preparing yourself for for inquiries by the tax authorities. If you have a very kind of like orderly file in place, and it's
mm,
like, yeah, I did this because of this, and I did this at this point because of this, then you're much more likely to kind of
mm,
like demonstrate to a tax authority that it was a legitimate business
mm,
cause. If you can show them that these people were working here from this time, this is what they did whilst they were in this country.
mm.
And ultimately that comes back to Treasury, because you're saving you're saving money.
Yeah. Um, Last question. Um, in terms of the jurisdictions we're looking after at Kent,
Hmm.
you're looking at multiple countries in the GCC, right? It's not just UAE.
Yeah, we operate in all of the GCC,
Okay.
in Iraq, but also Australia, the US, Europe, Africa. We are a truly global company.
So focusing on the GCC,
Yeah.
where are the countries, the different countries in GCC, in the implementation process of the new corporate tax? I know UAE is already done.
Hmm.
If I'm not mistaken, some parts of the UAE is not yet fully 15%. Like for example, I think DIFC is
So
still.
the 15%, importantly, only applies to companies with global consolidated turnover of more than 750 million euros.
Hmm,
So it's only the very big companies that are targeted by that. The 9% rate that was the kind of the UE headline rate that was announced, initially, that still applies for a lot of companies that operate here. And then there's the free zones as well, and there is still scope for companies to utilize the free zones here in certain circumstances. Um, Now you ask about the wider GCC. So Qatar, Kuwait, and Oman have had corporate taxes for quite a long time. So now the rates were slightly less than 15% in some instances. So they've now kind of brought in an option for companies over the 750 million euro threshold to pay tax at 15%. And I know it sounds a bit strange that it's like an option, but if you don't pay the tax in, say, Qatar, if you have a company in your group that has adopted the rules, such as the UAE or the UK or someone like that, that other jurisdiction can take the tax. So you may as well pay it in Qatar. So it's easier to be compliant in the place. So so they've brought them in, and the Bahrain has now announced that it's introducing corporate tax as well. So it hasn't done yet, but I believe, put me on the spot here, but I believe it's next year.
hmm,
And then I think Saudi Arabia has a corporate tax regime as well, but the corporate tax regime applies to non-Saudi owned businesses, whereas Saudi owned businesses, the zakat rules apply to them.
hmm.
So there's a bit of a difference there, and I think largely the community is still working through, and I'm sure the Saudi Arabian authorities are still kind of like thinking through as well how that is going to how that's going to work in the future, because does zakat get you up to the 15%? Does it qualify? There's lots of interesting, very difficult technical questions.
Do briefly explain how it's impacting the taxes in Saudi Arabia.
So it's just a completely different way to tax a company. So
Hmm,
most corporate taxes around the world are applied on a company's profits.
hmm,
And that's, I think, how most people think of taxes being applied. Now, zakat in Saudi Arabia, that's more applied on a company's assets. So when you say a company should, so the OECD will come in and say, oh yes, you should pay tax of 15% of your profits, but that's just Saudi Arabia had a completely different regime. That's the way that they wanted to do things, and it's completely,
hmm.
they, my view, they should be allowed to do what they want.
Yeah.
It's their country, it's their sovereignty. So But now they're having to consider, well, if we don't have a tax of 15% of profits, then other countries around the world can potentially tax Saudi Arabian companies, even though for activity undertaken in Saudi Arabia. So it's a bit, in my mind, that's completely unfair. And I think, I don't think that's necessarily the intent of the rules. It's just these rules are extremely complicated. And how do you introduce rules that apply to every company in the world across every jurisdiction in the world? It's really quite hard to do. So I think there's a bunch of like teething problems. And, I think the whole tax community is working through them as we speak. And it'll be very interesting to see where Saudi Arabia ends up. But I'm ultimately not too concerned about it. I think, it will... I think there'll be a clear and sensible path through. It will just take kind of like a bit of time.
Maybe the last question and it's a bit of a combo question.
Sure.
2 questions in one.
Most of your questions are.
So how do you see the tax and treasury roles are evolving? Do you see them becoming maybe as one in the future, or do you still stand by your comment that as a treasury don't need to be 100% full involved in tax? And do you think that AI would help on this part, giving or empowering treasurers to have some sort of tools that would help them on the tax side?
Yeah, a very good question. Yeah, so I think, in terms of will tax and treasury become one, I am absent of AI. I don't believe so. I think different businesses need different things. I think I can see it makes a lot of sense, I think, in large international business with lots of cross-border transactions to have somebody who's responsible of tax and treasury. But, if you're big enough to warrant having both kind of people in like a tax team and a treasury team, and to have somebody head of tax and treasury who kind of like manages those people and reports into the CFO, kind of like my role is, if a business is of that size, then I think it makes sense. But I don't think in 10 years' time the kind of tax and treasury will be the same role. I think there's lots to do, and there's very kind of like distinct roles within that. Now, to answer your kind of question about AI, I think AI will be fantastically useful for treasurers upskilling about tax. You have to be very careful, clearly, with using something like ChatGPT. But I think if there's a treasury manager who sat there and who doesn't really understand something about, say, Pillar 2 is what we've just been talking about. It's quite complicated. If you wanted to get a good general overview of that, previously you might have had to try and engage an advisor, or pay somebody for an hour of their time to explain it to you. Now you can put it in ChatGPT and it'll give you an excellent overview of the kind of it's very good for overviews. If you're asking it very, very specific questions, you have to be a bit careful. But AI is improving all the time. But I don't know if it will necessarily, for a treasurer, I don't know if it will mean that they can answer all the tax questions. I think you still have to have quite a significant amount of underlying tax knowledge and experience. But I think what I said earlier on about it's important for a treasurer to know what's tax sensitive and what's not, and when to consult and when not. I think using AI to kind of help conclude about whether or not something's tax sensitive and whether or not they need to raise the profile of a certain transaction, that type of thing, I think would be very helpful.
Yeah, makes sense. Yeah. Again, thank you a lot, Mark, for joining me. Really, really appreciate it. And I've learned a lot today. Thanks a lot.
Yeah, it's great to be here.
Pleasure.
Thank you.